We've seen a resurgence in COVID deaths and hospitalizations as there is a new variant called EG.5 that has been accounting for a massive amounts of those new COVID infections. So this is causing Pfizer, Moderna, Novavax, and other companies that are COVID related to move higher today. And in this video today, I'm going to go over each of these companies. I'm going to go into their financials. I'm going to compare all their financials. I'm going to give a price prediction for each of these stocks. So with that being said, let's go into today's news. So according to data from the CDC, the variant codenamed EG.5 has accounted for an estimated 21% of total COVID infections for the week ended August 19th. The strain, classified as a COVID variant of interest by the HWO, and that led about 17% of total cases about a month ago. So meanwhile, week over week, COVID-related hospitalizations have increased 14%, and deaths have risen 8%. For the week ended July 29th, the increase in COVID hospitalizations stood at more than 13%, while deaths remained flat. So we're seeing this variant cause, the deaths and the hospitalization rates to jump pretty drastically for COVID as a whole, which obviously isn't good for the world. I'm not trying to turn something so negative into a positive here, but for these COVID stocks, for Moderna, Pfizer, and Novavax, it's actually a big positive for the company. So I'll jump right into Moderna's financials. So the company isn't PE positive at this time, but we do have a price to book ratio of 2.2, which for those that don't know, that basically means that the market cap is 2.2 times the book value. And that is actually basically in line with the sector median. And compared to Moderna's 5-year average of 9.2, Moderna is trading very cheaply when you consider their price to book ratio. And then let's take a look at the revenue growth numbers. So revenue has dropped drastically over the past 12 months as, kind of COVID related things have, subsided a bit, and we've seen less revenue from that part of business. So revenues have been declining for Moderna. And then when we take a look at the profitability for Moderna, we can see that we have a gross profit margin of 26%, which is basically half of the sector median. And then we have a net income margin of 11%, which is actually well above the sector median. So overall, these profitability metrics don't look too shabby. And we also have basically $10 in cash per share, which is roughly, 8.5% of the market cap in cash, which definitely gives the stock a good floor, just having that solid cash holding. And then let's take a look at the chart here and see if we can't give a price prediction for Moderna. So we've seen some pretty massive resistance at about 115, about $115. We've seen significant support over the past year or so, and past support becomes new resistance. So I do believe this level will likely act as resistance for Moderna. So this is where shares had bottomed out in June of this year. It's also where shares had bottomed in September and June of last year. So, given this is an area of past support, it will likely act as resistance, especially since this level also kind of coincides with the stock's 50 DMA, which would obviously act as further resistance for the stock. So I do believe it is somewhat likely that we see a rejection of this level and a move lower over the coming weeks to really days here for the stock. So that's kind of what I'm seeing for Moderna. And I'll go through this seasonality trend that I always do with all the stocks I cover. So on average, shares rise basically 0.5% in August here. And then in September, shares typically drop 3%. This just shows me the average monthly return for the stock. With that being said, let's keep it moving here. So Pfizer, let's take a look at Pfizer's financials. So this is going to be the best value we're going to get for a specific company. So also want to make one note here. So the stock is only up 1% in reaction to this news. That's because Pfizer is really a huge business, right? It's not just like a COVID stock. So the COVID piece of the business is a smaller piece of the overall pie when you compare it to Moderna and NVAX, which I'll go into in a bit here. But that's kind of why this move is a little bit more measured compared to the parabolic moves we're seeing in Moderna and NVAX, up 16 and 9%. So with that being said, though, let's look at the financials. So we can see here that the company has a 7 times PE, which is below its historical 5-year average, and it's below the sector median. So this tells you that the company is trading more cheaply than it does when you compare it to its own history, and cheaper than the general sector. Also, we see price to book ratio at 2 times, which is kind of in line with Moderna and is actually below the company's 5-year average and below the sector median. So once again here, we're trading cheaper than the general sector, and we're also trading cheaper than the company's 5-year average. And we have a dividend yield of 4.4%. So overall, this definitely shows you that the company is trading at a cheap valuation relative to its own history and the broader sector. But when we kind of see why that company is trading at a cheap valuation, well, it's because growth has really been quite dismal for the stock over the past 12 months. So revenue growth over the past 12 months has been negative 23%, which is well below the sector median and well below Pfizer's 5-year average of 25% growth. So, the declines in growth is really why investors aren't willing to pay up for the stock. And then when we take a look at profitability numbers here, so profitability, this gross profit number is 68%, which is actually below Pfizer's 5-year average, but is above that sector median. And we see net income margin at 27%, which is in line with Pfizer's 5-year average, but well above that sector median of -5%. And then let's take a look at the stock and see if we can't give a logical price prediction based on technical analysis. So the stock has used this 50-day moving average as resistance back in April, as resistance back in May, as resistance in May once again, and then as resistance in July and August of this year. So it would seem somewhat logical that the stock is likely to reject this level once again, and we could see a move lower over the coming days. Obviously, with the news today, we're kind of bursting through this 50-day moving average. And all these price predictions can kind of be broken, right? So if COVID goes crazy and all these stocks are very important again, well, obviously the chart really won't really matter. But in terms of just pure technical analysis, we still are we still are below all daily moving averages, which implies bearish momentum. And we have a resistance level at about $41, which is where shares had bottomed out in October of 2022. It's also where shares had bottomed out in October of 2021. So that is kind of the next major level of resistance for Pfizer I'm seeing. I don't think shares make it above this level anytime soon. If they do, and they close above this level and close above all daily moving averages, my tune on the stock would kind of change. But given we're below all daily moving averages, I don't think the stock is likely to make a significant move higher over the coming weeks. So I really do see a rejection of this 50 DMA and a move lower over the coming weeks. Obviously, anything can happen. It's kind of not really moving off of technicals right now, or the stock is really moving off of fundamental news about COVID. And then we can see here in the stock's 55-year history that August is one of the worst months in the stock's history. It's actually the 4th worst month in the stock's history. So the stock is typically down in August, also in September. But then we're moving into October, where shares do typically rise 2% on average. So, definitely moving into a bullish seasonal trend with October, November, and December all bullish. But currently we are bearish in terms of seasonality. And then let's take a look at Novavax here. So the company isn't making any money at this current time. We don't have a positive PE, but the numbers we do have do look pretty good. So in terms of price to sales, we have a 0.37 number for price to sales, which is well below the sector median and well below Novavax's 5-year average of 18.4. So that is all very good stuff for the company. But like I said, it's tough to evaluate the valuation because the company doesn't make any money. And then revenue growth. So growth numbers look better than any of the other stocks that we covered. Looks better than Moderna and Pfizer. So we have 23% revenue growth over the past 12 months. And then over the next 12 months, we're projecting for 4% revenue growth. And this 27 revenue growth number does seem pretty good when you compare it to the sector, but when you compare it to Novavax's 5-year average, it's actually declining pretty significantly as the company has a 5-year growth average of 571%. With that being said, though, let's take a look at the profitability metrics for the stock. So we can see here that the gross profit margin is minus 8.4%, which is well below the sector median. And we have $5.36 in cash per share. So that tells you that over half of the market cap is in cash, which I definitely do think makes Novavax a good investment here, or really an investment with limited risk because they have so much cash on hand relative to its market cap. But with that being said, let's take a look at the stock's chart and see if we can't give a logical price prediction based on technical analysis. So we could see this $6.80 level kind of acting as support for the company. So this is where shares had bottomed out in May and June of this year. So, this level could act as support if we come back down to test it. But honestly, that's no one really knows if we will. We did cross over the 150-day moving average today and the 50 and the 100-day moving average, which is all really good signs for the stock, obviously. But we do have some resistance at around $10 to about $9.50. So we do have a bit of a resistance range there. So be on the lookout for that. Not the end all be all there, but it definitely is something you should be having on your mind, if you will. Put it on the charts that you're covering. I would definitely say that would be a smart thing to do. So you could draw some resistance here at about $10 or so. This is where shares had topped out in April. It's where shares had topped out in May. It's also where shares had topped out in July. So what I will be doing, my trading plan for this stock is I will either be waiting until we burst through this resistance level and we move over the 200-day moving average, or I will wait until we come down to this support level, like I said, around $6.80. So if we come down to the support level, I think we will likely see a move higher, over the coming days. And then, if we see a move above this support level, let's say, we see more COVID numbers popping off over the next 2 days, I think it's likely that we likely burst through this $9.80 level and move higher over the coming weeks. So that is my opinion on Novavax. That's my opinion on those stocks. But with that being said, let's compare all these financials to the close peers. So just comparing this to Moderna, Pfizer, and Novavax. So in terms of valuation, as I said, Pfizer definitely takes the cake as the cheapest stock relative to its valuation. And then we can see here that price to book ratio is 2.09, which actually still beats Moderna. And then if we were to look at a price to sales basis, though, Novavax does rank out as the #1 stock. And then growth metrics here, we can see that growth for Moderna and Pfizer were both negative over the past 12 months. This is different for Novavax, though, as Novavax still is seeing its revenue grow despite kind of drops in COVID. So in terms of growth, Novavax is the #1, Pfizer is #2, Moderna ranks as 3rd. And then for profitability, Pfizer is going to be ranking out as the #1 stock as they have a 69% gross profit margin and a 27% net income margin, which beats Moderna's 26 and 11 and Novavax's -8 and -36. So Pfizer is the best stock in terms of profitability. But with that being said, let's take a look at the balance sheet for all these companies and see who has the best balance sheet. So in terms of cash on hand, yes, in terms of a nominal number, Pfizer has the most cash on hand. But when we compare that cash to debt, actually Moderna is in the best spot. So Moderna has $8.4 billion in cash, $1.1 billion in debt, meaning that the company has $13.4 billion more cash than they do debt. And then when we take a look at the companies at Novavax's holdings, so they have $505 million in cash, $237 million in debt, meaning they have $268 million more cash than they do debt. And then Pfizer has $44 billion in cash, $65 billion in debt, $20 billion more debt than cash. So if you were to look at these balance sheets, I would say Moderna is most healthy. And then I want to say Novavax here, but they're burning so much money that it's really tough to kind of say that because their net operating cash flow for the past 12 months is negative $654 million, which is actually is 3x of Moderna's cash burn. So I really can't say their balance sheet looks extremely sustainable, right? So I would have to rank Pfizer as the 2 and Novavax as the 3. But in terms of cash per share, Novavax definitely looks very attractive with over half of the market cap in cash per share. So I ranked it all out. I told you what I think about all these stocks. Let me know what you think in the comments below. Also, please leave a like and subscribe if you enjoyed this content. So with that being said, I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone, happy trading, happy investing.